Hey, welcome back. We are coming up on the end of the year, so about time to get your finances in order, right? Alan Lancz is here with us with some things to do, maybe not to do at this time of year. So is this a good time to sit back and look at your investments and your 401ks and see what was good about 2024, what was bad?
Oh yeah, I mean, I think it's always a good time, but at least do it once a year. And we're coming off another 20+% gain in the stock market, just like last year. Back to back is very unusual. Bonds, last 3 years, you've lost money with bonds. International, where our stock market's doing 20% a year. International was up 7% on average, the EFA this year. So there's definitely ways to get the most out of the risk that you're taking, but understand the risk you're taking, and the market's high now, so you're going to have more volatility. And again, I wouldn't be in bonds. I don't think interest rates are going to go down as much as people think, and that's going to make it more difficult for the stock market too.
So with the change in presidency, Trump was more a business guy and the economy fired up. What kind of things are you seeing early signs of that may be good and may be bad? Tariffs scare a lot of people.
Yeah, I think the good is there's positive energy. Tesla stock is up 90% since the election, and a lot of companies have done really well. There's segments like steel, et cetera, that have done poorly, might recover if we get tariffs, but there's other companies that are going to be hurt. And then the other thing is, like with bonds, you know, if interest rates don't go down as much, if they go up, you lose money in bonds. If inflation kicks in because of these tariffs, you're going to lose money in bonds too if it's a 401k or retirement plan. So really understand what you own and the risk you're taking, because it's going to be more volatile.
It's funny that you say that Tesla is up, and I get it because he and Musk are buddies now. But the thing is, if we're going drill, baby, drill, which is the quote that he famously said, and we're going to really put all our eggs in the oil basket again, that's the exact opposite of what Tesla exists on.
Exactly, and that's why we've taken a little bit of profits in Tesla. I mean, it's just up too much. You can't be greedy. And a company like Uber, which in October was 87, went down to under 60 this week. We're accumulating because they will do well with autonomous vehicles as well, but their stocks have been cratering while Tesla's been soaring. So I think those are the type of strategies, like on an individual basis, that you can do, and the same thing on ETFs or mutual funds. Make sure you understand what you own so that you're not just riding the ups and downs in the market, because we're going to see a lot more of those.
Alan, last time we talked, I believe we talked about AI, and that, I mean, the sky has been the limit for that. Has it leveled off somewhat, or what's happening as far as production values and things like that, and where the plants are going? Where does that future lie?
Yeah, it's amazing. AI is for real. I mean, we've been positive on it, you know, as you well know. But some companies have been overpriced because they're expecting immediacy, and it's going to take a number of years to really get the revenues and what have you. Give you an idea of the Magnificent Seven, it was worth $1 trillion, all the Magnificent Seven 12 years ago. Today, they're worth 18 trillion. So that's how much gained in anticipation of AI and, you know, what you're hearing with all the data centers. So the things that we talked about were like earlier this year, utilities, because you're going to need more energy. Utility stocks were down, you know, they're recovering because of that. Financials, because of deregulation. Financials were down, small caps were down the first half of this year. Now they're up 15, 20%. I think there are areas to play AI, but not necessarily what everybody thinks.
Pharmaceuticals, we're coming out of a period when with COVID and a lot of things, and we're bringing a lot of production back here, a lot of medication. Hopefully, that's the goal. Is that the way to go too?
Yeah, I think there's some select opportunities there because they've really underperformed. You know, I think you've had, you know, as far as Lilly and a few companies doing well, and the rest of them have done very poorly. There's areas I'd stay away from, you know, like the CVSs, the PBMs, because I think politically they're just going to be hit. But, you know, I think there are some companies that offer opportunity that pay good dividends and are solid companies. So yeah, similar to utilities a year ago, yeah, I think, you know, selectively some healthcare might, you know, outperform. But again, it's a matter of being in the right areas and understanding what you own.
We have about 30 seconds left, but the global economy, you know, we're used to the Ukraine-Russia war, Middle East all kinds of problems there. How much has that impacted? What long-range problems will you see there?
Yeah, I think that's challenging. I mean, even though a lot of things were up in the U.S., you had South Korea, France, obviously Russia down, and there's some people that have lost money internationally because of that. They've really underperformed. I think if the U.S. market continued to go up in 2025, we had another big year, then I'd start looking at international because that'll broaden out just like our stock market broadened out from the Magnificent Seven and the AI type stocks.
Alan, always good to talk investments with you.
My pleasure.
Happy New Year and Merry Christmas before that, too.
Sounds
Thanks,
good.
my friend.
Same to you.